Thank you, everybody. I sat in for Hubert's presentation, and not an easy thing to do to be fielding live trades by the second, but he did a really good job. I enjoyed that. I hope you guys enjoyed that as well. Um, so this is a special YOLO publishing webinar, and I'm going to tell you about the number one thing that's been working for me since August of last year. And it's actually interesting because it's a market that's less than 3 years old. And what I found based on my experience is that new markets are easier to take advantage of. And that's certainly what we want to do. So joining me on the call, or possibly joining me on the call, will be Todd Bubba Horwitz. He has 30 years experience as a member of the Chicago exchanges. He's the founder of Average Joe Options, and he's a regular contributor to Fox Business, CNBC, Bloomberg, and various other media outlets. I first met Todd in 2008, maybe 2007. We lose track on that. But I've known him for a long time, and pretty much we were the same type of trader, except I was the stock guy and he was the options guy. And I always pushed stocks and he always pushed options. And finally last year he broke through to me and he said, there's this strategy that's perfect for you, because what I'm really good at is identifying good levels in trades. And it's like, if you combine your ability to identify levels with this option strategy, it will be a home run. So I'm going to tell you the story about how it began and what it is now and why we're such big fans of it. Okay. Little background about me. As Jana said, I had some experience on television, appeared on the Tonight Show, ABC's Good Money, Consumers Digest wrote me up as Average Joe gives above average trading advice. So a lot of built-in credibility, which I was fortunate to have, and hopefully makes you feel more comfortable speaking with me. I list 17 years as an electronic trader. The reason that's relevant is I started day trading in the 90s, and when I was doing that, day trading was relatively new. And from 1997 to the early 2000s, it was ripe to take advantage of. And now this strategy I'm talking about is a market that, again, is only 3 years old. Okay? So I'm excited to share it with you, and you're going to see why it's kind of ripe for the picking. And again, founded the Adam S Trading Group. So here's the agenda. We're going to talk about the origin of the options money machine. We're going to define our strategy. We're going to talk about what makes OMM so exciting, a virtual ATM. We're going to give real-life examples of the strategy in action. We're going to talk about how we did when the market went down 1,000 points. I'll tell you why that's very relevant. February perfection, I'll explain that. What's happening lately? Like, what are we doing right now in trades? As they are done on a weekly basis, we could show you everything that's happened from this year, okay? And we'll talk about how you could take advantage right now, all right? And then obviously, we'll do a live Q&A, and hopefully Todd will be there to join me, because he's the one who taught me this strategy that I've kind of taken and run with. All right, so the origin of the options money machine. It started with a bet I couldn't lose. As I told you, Todd for years was trying to get me to trade options. I was always a stock guy. He's like, this combines your technical analysis with options. So I agreed to do 17 trades. That was my lucky number. I was like, let's go 17 trades starting in August 2013. And it turned out to be 17 100% winners in a row. And what we're doing is we're selling out of the money puts. And I had never heard of this before, but he said to me, Adam, this is what guys like Carl Icahn and George Soros are doing. This is how you become the house in the market. And when he explained it to me, he showed me how in Herbalife, for any of you that are familiar with that story, Carl Icahn took his big position in Herbalife by selling out of the money puts. He took that money and used it to buy calls in the stock and made a fortune doing it. So, these are some of the most successful traders, investors in the world. They were using this strategy. I certainly wanted to try it and see how we can do. And once we had 17 straight winners, I became a believer. So let me explain exactly what it is that we're doing with this strategy. So what is the options money machine? It takes advantage of the weekly options market, which began, it says 2 years ago, it's between 2 and 3 years ago, but it's just now attracting major attention. As I said, it's what tier one hedge funds and activist investors like Carl Icahn and George Soros do. And right now, this income strategy is averaging us $140 per trade with a 93% annualized return since August. Right now, we're averaging around 3 trades a week. Sometimes it's 2, sometimes it's 4. So it's a little over $300 a week is what it came out to that we're averaging based on a certain account size, which we'll get into later. The nice thing that I'm going to explain too, though, if anyone's wondering, is can anybody do this, or do you need a certain amount of money? What we do is there's 2 different ways we do it. We either sell the puts naked, or we explain how to do it as a spread trade so that everybody can participate. Okay? So what makes the options money machine so exciting? And here's why I call it a virtual ATM. The first thing you're doing is you're selling the out of the money put. So you're collecting the money. That's always a great deal to be involved in, right? Where you get paid to start the relationship. I love that. So the money comes into your account, okay? You're selling an out of the money weekly put. So the reason why you're disciplined is because once you put these trades on, we put them on today, every Thursday, that's it. You set the trades and you're good to go for another week. So you can't get out of control trading. How many of you have ever found yourself in a position where you were over trading? You kept buying lower, or you were short, then you were long, and you were all turned around and you were losing money? Well, the discipline in this is it's one trade, you're committed, and you move on for the week. Also, it gets you organized. How so? Because at the end of every week, the trades are over, and because 90% of the time your premium is collected, what you're going to see is your account is cleaned out, meaning that the positions disappear and you're looking at a fresh screen. If you're ever like me and you look at your account sometimes and you're like, I have too much going on. I'm making money in the stock I'm trading right now, but I'm losing money somewhere else. I don't even know where. Or how am I making money? Because all I know is I'm losing in this position. That means you have too many positions on. So by doing this, you're getting organized because it's 2 to 4 trades per week. That's it. And at the end of the week, it's cleaned out for you, which is so refreshing. And again, you can't emphasize enough the enjoyment of getting paid every week, because that's why we're in this. This isn't a hobby. Hobbies you spend money on, but when you go to trade, this should become a source of income, and that's exactly what the options money machine has done for us. I have this funny picture here of a time machine because I say, imagine if you could go back in time and take advantage of missed trades. Okay? How many of you have ever bought a stock at 30 and watched it go to 35 and said, not you're so happy, but what? I wish I had bought more. I wish I bought more. Or how many of you saw that stock at 30 and said, oh my goodness, this is at 35. Why didn't I buy it at 30? Why didn't I buy it at 30? Right? So imagine if you had the ability to go back in time and correct that mistake. Would you? And the answer, I assume, is yes. Of course you would. And what's so great about this is you can do it. Now, it's not a real life time machine, right? But let's give a recent example that I'm about to show you, which is Starbucks. Starbucks was a stock I bought a little bit at 70. Okay, this is one of the earlier trades. It shot up to 72.50. Now I own the stock, but I was upset because I knew 70 was a good level. I thought it was going to break out. Is that just for Russ, Yana? Everyone else hear me? Just making sure Russ said the volume's gone. Okay, good. Sorry, Russ. I just got to call back in. So with Starbucks, imagine I buy it at 70, okay? And I did. I own the stock at 70, and now it's trading at 72.50, okay? Well, I, like many of you, was like, oh, I should have bought more of that. I love 70. It was such a good level. So what I did was I sold. It was trading at 72.50. I sold the out of the money weekly 70 put for 67 cents. I did 3 contracts. So 67 cents times 3 contracts. I took in a profit of $201 on the trade. And what that was saying to me was, if Starbucks stays where it is at $72.50, I made $200. If it goes up, I made $200. If it goes down 2.5 points but stays above 70, I made $200. And if it goes below 70, guess what? I get to buy this I wanted to anyhow, not just at 70, but at a discount. I was able to buy it at $69.33. And I'm going to show you why at $69.33, I would have been happy to own that stock. So here's the Starbucks example, okay? At the bottom, you could see the clear green line, which shows the support that we love. This is where I initially bought the stock. Now, it moved up to $72.50, and that was our entry, okay? The vertical green line represents the head start we have, meaning as long as the stock stayed above that bottom green line for a week, we got paid $200. Now, what happened was it continued to go higher, and I owned some stock, but I also was able to collect money on the option that I sold, making me less upset about not owning more shares. That was how the time machine example came to be, because I was able to eliminate that feeling of regret by selling the put, which was saying I was right, I liked the 70 level, I should have done more, and now I was able to go back in time and do that, okay? What I'd like to do now is give you some more examples, and let's see what happens if you end up owning the stock. Here's a trade we made this year, okay? SL, silver wheat. I'm sure many of you have heard of it. Silver stock. Look at the bottom green line and look at the major support we identified there. As a technical analyst, that's the kind of support that you want to play off in a trade. So when the stock moved up to 22, I actually didn't even own this one, but I wanted to be involved. So we sold the 22 put. It was trading around $22.50 for 30 cents, meaning we would take ownership at $21.70. And it ended up that we owned it. The stock went, it sold down below 22, and we took ownership of the stock after a week at $21.70, which we were perfectly happy doing. And I can't emphasize that enough to you guys, all right? As technical analysts, if we're identifying a good level, that means very simply we want to own the stock at that level, okay? I'm happy to collect the premium if I miss the trade and it's just to keep going up. But if I could buy SLW off that 20 support line, I want to own it. So I got executed at $21.70, and we all did. And the stock traded up to 26. We made over $1,000 in that trade on either 3 or 4 contracts. This one might have been 4 contracts. Todd, if you're here, I don't know if you could speak, but I think it was 4, right? I don't think he's here. Okay. So it was 4 contracts. Okay. So that was when we ended up owning the stock. That was good for $1,000. Let's look at another example. LNG. Any of you guys heard of this one? So LNG was major support at 40. Okay. Look at that line. Look at that line. All right. So now, when this stock got up to 44, we sold the put off this 40 level. And it traded down to around 42. That's where we took ownership. And you see there's very little risk because the support at 40 is strong below it. And this stock at the time ended up going up to 47. So it was good for almost another $1,000 also. And as you see, it's gone even higher. So one of the added benefits of this experience has been that we identify good technical trades. Many times when we do take ownership of this stock, it becomes some of the best trades that we have. Here's one where we don't take ownership. Look at WAG. Look at this beautiful stock. From December to January, I miss it. It just sat at 55. It just sat there. And all we did was sell a put, sell a put, sell a put, collect premium, and eventually this beautiful, beautiful stock went up to 69. And we made some more trades in it, but we had a 2-month patch where this was just, simple. Like, these are the best charts for this strategy. At that point, we had traded it 5 times since inception. After that, we've actually traded it more now. Altria, right? A boring, do-nothing stock. But what's so great about the options money machine is you don't have to identify a stock that's going to run 5 points or 10 points. All you need is a stock that's not going to do anything, and you're going to get paid. So here's another stock that has paid us on a weekly basis. From February to March, it stayed right around the 35 level. Then it moved up to 36.50. It stayed there for a month. It's very easy to sell weekly options in this stock. You guys with me? Microsoft. 6 times in a row, we collected 100% premium. Then it tried to get fancy. It moved to 40. We actually had one of our losers this year was we took ownership of Microsoft, and our stop, because well, if you take ownership, we're going to tell you how to trade out of it. We placed a stop at 38.90. It hit 38.90, never went lower, and then ran to 41. So it would have been like instead of being a $100, $200 loser, it would have been like a $700 winner. But we missed it by a penny. But before that, we collected premium every time. Look at the chart. When you see a chart like this, when we identify this, you're profiting from doing nothing. What I like so much about this, and maybe you guys could take it in versus some other things, is it's simple. We're not trying to predict what's going to happen in the next couple of minutes. What we're doing is we're going to take a 1-week strategy based off on a strong chart, and we're going to take advantage of time. Literally, I don't know if you've ever done this. I really don't bet that much anymore because what's the point? But on a boxing match, I bet on the over in rounds for a fight, meaning that nobody would get knocked out. And it was so much fun because the guys got dizzy and they were starting to fall, but all they had to do was stay up until like whatever round it was. It was like a minute 30 into the 10th round, and then I won. And it's so much fun when you're watching the clock, rooting for time, and that's what this trading is too. You're sitting there just waiting for the week to go away because as soon as the week's gone, trade's over, you got paid. Do you guys remember what was going on with eBay? Where, again, this involves Carl Icahn. He was lobbying to separate PayPal and eBay. Have you guys heard about that? And now he's backed off, but there was a stretch. There was a big stretch at the beginning of this year where this was a big sticking point. And what happens, the stock became like a deer in headlights. It didn't move because there was this these two heavyweights going at it. It was eBay versus Carl Icahn and what they would do. So eBay did nothing, stayed in a 2-point range, and we made 7 trades in it, receiving all 100% winners. This next one is actually my favorite stock. This is Verizon. Verizon is a stock that for months, since I've been doing this, has allowed us to profit from doing nothing. Okay? If you look at the chart, it doesn't move that much. Now, there are certain times where we can't trade it. If we know it's paying a dividend that week, we don't want to do it because as an option seller, by selling the put, we're not going to be able to collect that dividend. So we'll avoid it on dividends, we'll avoid it on earnings. Other than that, you sell this option every week, and it's been paying us really well. That's the key. I think the special sauce, other people could sell puts, but what makes the option money machine unique is we're going to identify the right stocks to trade each week, almost all the time. Okay? But one thing that Todd had said to me when we started doing this was, one thing you want to be careful of, this works great in a market that goes up or a market that goes sideways, but you have to be extra cautious in a market that goes down. And Glenn will explain how we do credit spreads also. So, I don't want people to get discouraged because they can't sell the naked puts, because you could do this exact strategy with credit spreads. But in January was a point, I don't know if you guys realize this, but the market dropped 1,000 points at one point. We went from 16,600 to 15,700. But overall, it was 1,000-point drop. Okay? Now remember, we started this strategy in August. So January was a big test because how would this out of the money put selling options money machine strategy do when the market dropped? Here's every trade we made in January. At the time, it was our best month ever. Look at this. This is every trade we made in January. Now, what you'll notice when you look at these stocks, WAG, X, ANF, POT, SLW, WAG, Verizon, SLW, KBH, eBay, Microsoft, LNG, we're not messing with Netflix or Tesla or Solar City. We don't want the headaches that come with that or the fluctuation. This is a conservative income strategy. This is not a strategy that's going to make you millions of dollars. We're not going to take on the risk. This is a strategy where we're going to look to just pay ourselves and get the income. It's an income strategy. So the way we do that is by not messing with the big guys. We kind of just play cool and we sell the weeklies on more conservative stocks. So when the market's dropping, we're going to hit up an SLW because that could go inverse of the market. We're going to hit up Verizon because it pays you a dividend. We're going to hit the home builders because they were trading separate from the market and had shown strong support. We're going to hit eBay because there's a major battle going on between the board and an activist investor, so the stock's just going to go nowhere for the week. You see that? Now I see some questions coming in, and I could answer them. I mean, I'll probably try to answer them at the end, but I'll answer these really quickly. Do you sell the weekly puts at Thursday for the end of the week? I sell them on Thursday, like today would be for expiring next Friday, not tomorrow, but next Friday, because you get the most premium when you have the most time. So the weekly options become available on Thursday. That's when we sell them, and they expire the following Friday. Now, Valerie said, are naked puts the riskiest types of options trades? Valerie, I think I saw you. You kept asking for data. Another one. Was that you? Right? I was paying attention. I don't think they are. I think the yearly puts or the monthly puts are the most risky. And the reason is because how much can change in a year versus a week? You know, in a week, you could talk about Russia and Ukraine going to war. In a week, there might be some troop movements. But in a year, you could have an all-out battle, okay? When I look at the premiums on these things, like, I mean, if you would have sold a weekly put on Apple at 700, I mean, you would have got that. I mean, a monthly put or put that went down to 300. You would have been wiped out. But the weekly put on conservative stocks, I think, is the most conservative strategy. But you have to understand, I am more comfortable with this than you will be because I am a stock trader. I'm always comfortable owning the company. So what it's saying is I'm willing to take ownership at the price I want to pay. So it's just like a good negotiator, you know? Have you ever gone into a negotiation for something that you really wanted and you ended up paying more than you wanted to? And you said, I wanted it, but I shouldn't have paid that much, right? Whether it be a house or a car, piece of jewelry or an auction, there's something you bought that you said, I didn't need to do that. With this strategy, you can. That's where the discipline comes in because you're selling the price you want. And either you get paid because it doesn't get there or you get it exactly where you want it. So I don't believe it's the riskiest type of option trade. I believe it's the most conservative, okay? And again, same as Glenn, we're going to be doing credit spreads too. How do you deal if it gaps against you over the weekend? I mean, it's a great question, and a great example would be JP Morgan, okay? JP Morgan was a stock that we had sold the weekly option in, okay? And Friday night, by the time the market closed at 5, they announced they were going to be something bad. Something was, their trading desk was going to be off by 20%. I don't know what the news was. But JP Morgan is such a Hello?
Hello?
Hello? Todd, I'm in the middle of hey, you there?
Can you hear me? Yeah, can you hear me?
Yeah. Yeah, it's
Am
really
I
loud.
clear?
You're talking to everybody right now.
Sorry.
Um, you're here. Okay, you're here. Okay, good. Todd Horwitz is in the house. What's up, Todd?
Am I too loud or am I okay?
I think you're a little loud.
Okay. I'm trying to adjust this. I'm on my fourth computer trying to do this.
All right, yeah, make it a little bit lower. I'll keep going. These guys said too loud, so. Well, thank you for
How's that?
joining us. Yeah, that's better. Better, guys?
Okay.
All right, good, cool. All right, so wait, how do I get this down? All right, this is better. So with JP Morgan, um, you know what, Todd? Just put it on mute for a second so there's no echo.
Okay.
All right, sorry, I just don't, because I hear myself talking in your mic. All right, guys. So with JP Morgan, there was a stock where it had bad news over the weekend, but it was such a popular stock and such a low PE that there's really no place for it to go. When you sell a put in a stock that has a 12-to-1 PE ratio, bad news isn't going to move it that much. So what we saw was the stock traded down, we owned it, and we navigated. So it traded up. We had sold the 55 for 18 cents, so our break even was 54.82, and we ended up selling the stock at 54.60. So we lost 22 cents or $60. So all right. So that's an example of when it gaps over the weekend. If we had bad news like that in Apple or Netflix or Tesla or Solar City, you could have had a 50-point drop, and it would have been really scary and really dangerous. But we have hundreds of people coming on and doing these trades with us every week on a webinar, and I can't stomach all those people being in those stocks. And I'm sorry. You know what, Todd? I think I'm sorry. You're the man, but I think you got to log off because it's just like destroying the audio right now. I love you, but I think this is destroying the audio. Okay. Yana, is that better? Okay, thanks, Yana. All right, yeah. Okay. By the way, just so you guys know about Todd, again, he's the one who taught me this, and you could see him on television every week. He's who the experts turn to ask what the market's going to do. He's on Bloomberg, he's on Fox, he's on CNBC, and he comes on the call with me every week, and we do this together. And people really enjoy the camaraderie. But this type of event is new to us, so we thank you guys for bearing with us. Where we're speaking into the computer, and he's in Chicago, and I'm in New York. But the best options trader I know, Todd Horwitz. Okay, and the big thing, in short, it doesn't matter whether you have stops or if it gaps overnight. In short, it's conservative stocks. So on that stock, we took like a $60 loss, whereas we would have had a $54 gain. But because of the stocks we're trading, it's not going to be out of control. What's your average credit per contract? Probably around 20-something cents because it's conservative. You could get $2 or $3 in a Tesla or Solar City, but it's not worth it. So how do we follow up January? Okay, so you see what happened in January. Look at the trades in February, because in February we had what can forever be known as perfection. This is every trade we made in February. Look at that. Every single trade was 100% winner. You're getting paid every week. Okay? Look at the picks. Potash, it had stabilized in the low 30s. It was an easy sell. GDX, which was a gold trade, gold ETF, Verizon, Linear Energy, eBay, Altria. Are these stocks doing nothing? we got paid every week. Okay. So how do you manage your risk? And then one loss wipes out many games. Yes, if you have a loss, right? If you're making $300 a week and you have a loss in a stock, now remember, you take ownership, you're not necessarily selling it. It could come back and be the best trade you ever made. Okay? It could come back and be the best trade you ever made, but there are going to be losses. Okay? And as Prasad just said, last week was a week where NASDAQ and Dow got hit hard. All markets dropped. Our Verizon made money. The JP Morgan, we navigated well. X is still be determined, and Yahoo was, look at it today, but Yahoo is going to be questionable also. The nice thing is you have a full week to decide. So coming into that week, but as I said, 90% of the time you're collecting the premium. So if you think about that, let's say you make $300, $300, $300, then you lose 300, you're profiting. So like anything, there are times when you'll be small losses, but when you start getting momentum like this, like here's what I found. If someone comes on and they have a losing trade in a week, they get nervous. And people say like, it's a leap of faith kind of just selling these options and being willing to take ownership. But the people who've been with us since the beginning have built up such a bankroll from this that they don't flinch. They're just onward and upward because they've played it out over time. So the longer you're doing this, the percentages continue to work for you. Okay. And I will hold your questions right now because I don't want to skip over. I don't want to skip over the ones that are coming in. I want to answer every question, but I also want to finish this. So hold the questions for right now, and then we'll answer them. So here's the February trades that you see. Okay. And then let's get more recently. If you guys saw when the biotechs broke down, Guilds had gone from the 80s to 60s. We were liking it. It was starting to stabilize ahead of the rest of the biotechs. We had previous support at 65. It was getting back around that level, traded up around 66 and change. We collected a really nice premium for the 65 or 65.50 put in Guild. I mean, the stock went to 79, but it was a 100% winner. Like within like 2 hours, the stock had already moved 4 points off its high. Another recent trade was JP Morgan. We've done this many weeks. So like if you have one loser, you lose $60. This was from a couple weeks ago. It was at 90%, but it was close to 55. So what we did was we took off the trade. Okay. Here's another LNG trade. This is Todd. This is one of Todd's favorite stocks. We played off the 54 level again. As soon as we sold it, it shot up to 58. We were paid off instantly. Okay. I don't know if you guys have been watching this stock, but Wells Fargo over the last couple of weeks, month, has hit a really nice trip, a really nice pattern. It's been in a holding pattern around 49, and we keep selling this one. It's been an easy trade to collect premium on. Okay. So let's talk about how you guys could take advantage of this now. And I'm going to answer questions as we do this, but as part of this, online trading marathon, we want to bring something to the table. So let's talk about how you can take advantage of right now and what we do. Okay. Thanks, Bruce. Okay. All right. So we're selling the weekly options. Every week we identify the optimal trades to upgrade your portfolio with. The maximum number of trades we've ever done is 4. The minimum number of trades we've ever done is 2. So it's anywhere from 2 to 4 trades in a week. We do portfolio management. So we'll manage every position we enter together, and we cater to all account sizes. So what does that mean? On average, there are people that could trade 10 contracts and 20 contracts, and there are people that can only do 1 or 2. I like seeing the puts be sold naked, but I know that not everyone could do that. What we typically do is we do contract sizes that range from 2 to 4. So far, the most contracts we've ever sold on one trade is 4, and the least we've ever done is 2. Okay? that seems to hit a sweet spot for everyone that they're comfortable with. And then there's a whole other group of people that only want to do the credit spreads. And so we call them the spreaders. And for the spreaders, we put on the exact same trade, but as a credit spread each week. Sometimes we vary it a little bit. And what we found is you could expect the returns to be 60% or 70% of what the naked trades are. So meaning if we're averaging $300 a week naked, then you would be averaging around $180 to $210 as a spreader. And the reason why it's lower is you're mitigating your risk, so you're getting less of a premium, but also you lose the ability to take ownership of a stock and have it run up for you. So it's a double-edged sword. You don't want to own the stock if it's going down, but you miss the opportunity to own a stock and have it go up. But what I found, and I'm sure Todd would agree, and maybe Todd will be easier if you want to chat in because actually everyone could see it. That might be the way to go. I'd say like 30, 40% of people do the spread trade, 60% do the naked. Todd's more of a fan of the spread trades because it's more conservative. I'm a little more aggressive. I like to do the naked, and I tell people even if you can only do 2 contracts of every trade, do the naked. Okay? There you go, Todd. Thanks. Market analysis. That's what I was saying about Todd before. He is on television every week explaining to the experts what the market's doing and why. So having him be on there to explain the why behind every trade, like we'll talk about numbers that are coming out of things that might influence the week, or you'll hear me want to put on a trade and Todd will say, Adam, we have jobs numbers coming out tomorrow. Let's only do 2 contracts of that. Or this might be a better spread trade. And we communicate with you. And that's really super important. I went to something called the Financial Publishers Roundtable. I've been going to it for years now, 2 or 3 years in a row. And a lot of people were marketers first and traders. Todd and I are traders first before we became publishers. So I stood up in the room and I said, I don't understand. I'm pretty sure my results are better than all you guys. How come retention rate gets stuck at 60%, 70%? I don't get it. And they laughed and they said that it's really about the relationship. It's about the relationship. And that when it comes to people wanting to stick with you and having a top-notch service, it's not just about the track record, and ours is fantastic. I said we're averaging $300 a week, but it's about the relationship and the ability for people to understand why you're doing the trade. So that's why the market analysis is so much fun. Sometimes people say we sound disorganized because we come on and we're like eliminating trades, but I think you learn so much from that when we explain why we're not going to do a trade that week. Hey, we're not going to sell Verizon this week. Here's why. It pays a dividend. You won't be able to collect on the dividend, so that's making the premium more risky. And at the end of the day, our goal is not to take ownership of the stock. Okay? At the end of the day, our goal is to collect that premium. If we do take ownership, we're happy to because of the levels. But all right. Okay. So that's the market analysis. And one thing we wanted to do special for what we wanted to do special for today was, oh my God. No. Todd, you're on the camera. Okay. One thing you want to do special for group training is sorry, guys. So you understand what we're saying with market analysis? Okay. Yep, Dan. Real traders, exactly. Yes, Valerie, laugh out loud. I don't even know what to say. All right. Okay. So we explained the why behind every trade. All right. Thanks, Maverick. And that's what people really enjoy is that we'll sit there and I'll be like, oh, I want to do this trade. I'll be like, Adam, you can. It has earnings. Because Todd's on the think or swim, and His thing has the big earnings button. In mine, I always have to check it by going to Earnings Whisper because on Fidelity they don't tell you that. Um, so it's really helpful to do that, and you understand why we're eliminating trades and how we get to the trades we make each week. And people have a lot of fun on it. It's a good growing group. Um, you know, right now with the people we have today, we'll probably go a little over 200. And we're not sure how big we're going to go with this because the one thing we don't ever want to do is move the market. We're always going to trade options that are enough that they're liquid to get in and out of. But eventually, as this grows, we'll have to cut it off at some point. Okay? Okay. Um, so what we're going to do for this is we have a special group training video that Todd and I did that explains how we do what we do. It's 2 hours long, and what's really cool is we did it on 3 different softwares. We did it on Thinkorswim, Options Monster, and Fidelity, so that you could see what it looks like on every platform. Okay, all right. Um, so what we're going to do is make it available to get the special group training. And for this event today, what we put together was a special package. Um, and you can take advantage of it here. You go to meshelite.com, all right, /TP. And I'm sure Yana will put a link or whatever. You could use, yeah, anyone that offers it, you could use, Vikram. And then if I go to the site, I just want to read what the offer is that you're able to take advantage of because it works out to be some pretty good math that has allowed us to move into the retention rate I always thought that we warranted. We're now retaining, it was 97%, but then we had a bad week, so it's probably down to like 92% now. We're retaining 92% of the people that are with us. And if you look at it, you'll see that normally, and what we certainly will be doing soon, I'm not going to push it up this week after a bad week, but the regular price is $1,998. Today through this special offer, you can go there now. We're going to leave it up for a couple minutes. It's $1,297 for 2 years, okay, and that's 35% off. And if you think about that, $1,297 for 2 years, if you divide it by 24 months, is $54 a month, and you divide it by 4 weeks, that's $13.51 a week for a service that is averaging $300 a week. Think about that, $13.51 a week for services averaging $300 a week. If you look at the yearly price, it's 1 year, 20% off, normally $9.95, today is $7.95. So do the math, divided by 12 months, $66 a month, divided by per week, it's $16.56 a week, again on a service that's averaging $300 a week. And the one thing we do that's cool is if for some reason you're not happy in the first 30 days, for the 2 year, we'll give you everything except 200 back, so you could have 1,097 back. And for the 1 year, we would give you everything but $100 back. Why do we keep $100, $200? Because our customer service is unlike anything you've ever seen. Both Todd and myself and a team of people are around to answer questions. People have a lot of questions on what we're doing here, and we want to make sure that you understand what you're doing and we can explain it to you, because we'd much rather have you ask a stupid question or ask a question that might sound silly than lose money because of the way that you're doing it. Okay? So what we're doing is, by the way, and I should have said this, for this link, the special group training is going to be available for the first 30 people that sign up. Okay, the 30 people is who gets access to the special training. And what you'll do is as soon as you sign up, obviously stay on here today for this marathon, but when you go into our site and you go 4 columns over, you'll see where it says a training video. So if you sign up now, you'll know you're one of the first 30 people in because that training thing will be in your website. And you'll also be able to get our latest picks later today that you could possibly put on tomorrow. All the calls are recorded, so that, if you ever miss it, we send out the trades right afterwards. Okay, we send out the trades right afterwards. So it's recorded, and like, let's say you're at work and you can't listen to the webinar, boom, it gets sent out to you. You get all the trades. You could see the price we got, make sure you're close, and they expire the following Friday. Why wouldn't you allow all your subscribers access to knowledge in the video? It's a good question, because at the end of the day, sometimes people need a push, Sandy, to take action. And we just came back from a live event in Las Vegas a couple weeks ago, where one guy said he had wavered on joining for like 2 months, and that he finally joined because I was in the background. I yelled, "Make a move already," and I didn't even know who he was at the time. His name was Sean, and he said he listened to me, so he made a move, and it was the best decision he ever made. So it's because people need a push to sign up sometimes, and if you don't do it now, you might not do it for a year. So there is incentive for the 30 people to make a move. Todd, Jack asked if it's okay for an IRA. You could answer that online, but I believe the answer is yes. Please explain. Yep, see, Todd said yes. Please explain when and why we need to take ownership of the stock. Okay, so let's say you sold a 60 put for 50 cents for the weekly option on today. Well, next Friday, if that stock was trading at below 59.50, then you would take ownership. So at the time, let's give Microsoft at 40 as an example. Let's say you sell the 40 put for 25 cents when it's trading at 40.30, which means you'll own Microsoft at 39.75. So if at the end of the week, Microsoft's at 39.50, you'll own it, and you'll be down 25 cents. I don't believe that's correct, Todd, is it? Ron said selling naked is not allowed in IRA. I believe there's plenty of people who do it in IRA. Yeah, I guess if you have the cash, but if not, then you would have to do the credit spread. Yeah, Prasad said it is allowed. Okay. Is there cash secured puts? Will special group training be recorded and made available to all subscribers? No, that, at the end of the day, there has to be some incentive for the 30 people to join. So if you subscribe right now, you'll get the 2-hour training, but you'll also get access to this week's trades. So the recommended account size to do the trade naked, I'd like to see is 15,000. Okay. If you do an account with 15,000, you're looking at 4-to-1 margin, 2-to-1 overnight. You should be able to do most trades. Sometimes you need more. I've heard people need to go up to 25, 30,000. Again, what I would say to do is do smaller contracts if you feel like you can. But if you have less than 15,000 in your account, then you would do it as a credit spread, and you'd look to build that account up. Okay. All right. And now what I can do is go back up and answer some questions live. Okay. So how much risk is in a naked trade? How much money is required to put on a naked trade? Well, you're risking taking ownership of the stock. And then what we do is we manage those trades and tell you where to put in buy and sell orders. Salsa said, even if it is a solid conservative stock, you can't control news, scandals, etc. I know that been there, done that, and assignment is not pretty. I'd rather make $300 daily in futures. Well, I think Todd and I would both agree that the news will affect futures much more than it will affect these stocks individually. So I think that is a backwards thing to say. I think it's absolutely wrong. What if you can only do credit spreads? That's completely fine. Drew, that's completely fine. He said okay for IRA. How much risk is in a naked trade? I answer that. What kind of account size do you need to answer that? Do you use indicators to scan for these stocks? If so, which indicators? No, because this market's so new, there's a limited number of stocks you could do it on. So we have that list of 25 stocks, and that is where we work with it. Maybe sometimes we'll go up to 50 stocks. So there's a select list of stocks we use, and then what we do is we examine them individually. So we're not doing scans, we're doing individual looking at each one. Okay. The normal risk in the credit spreads. Todd, what's the normal risk in the credit? Not terrible. Like, could be like double the trade, 0.60. Yeah. Someone asked about the monthly option. We do have a monthly option. It's menschmonthly.com/TP. And if you go there, I think we sell it quarterly or monthly. So you'll see those there. The monthly price they did for you. So the quarterly price is only $3.99. Today they did it for $3.49. And then the monthly price is normally $147. You could take for $127. There's no refunds with that, but you could obviously stop whenever you want if you're not happy. Okay. What other questions do you guys have? I mean, so I think the main thing to look at from this is why would we change anything when we could do this and this? Like this is a tangible, actual track record. You know, if you could have that kind of consistency, you don't mess with it. Gunther, could you please sum up in a short few sentences what makes it better to sell puts instead of buying that stock with a predefined stop and target? Thanks. It depends on the company. Like Gunther, if I loved Apple or First Solar or CSIQ, I'm going to buy the stock because I'm looking for that 5-point, 10-point move in a short period of time. But for the stocks where I love the level and I love the strength, but I know it's a high volume stock that might not move that much, like a Verizon or an Altria or an eBay, I could get paid just by the lack of movement. So in a few short sentences, for conservative stocks, I have the ability to make money when the stock doesn't move, which you don't have by buying the actual stock. All right. Yeah, monthly expirations of the list is longer, but we like the weekly because it's less risky. We don't sell calls because it's a whole different ball game and it's riskier when you go on the short side. Yeah, we make money. You may not only if it doesn't move or goes up, but even if it goes down. Like when you look at this January month, a lot of these stocks that we collected 100% premium in, they went down. But they didn't go down enough to get us out of the stock because what you'll see is when there's market volatility, you're going to see a flight to safety in dividend stocks like a Verizon. All right. What else you guys got for me? Am I allowed to? Mm. Any other questions or you guys set? March was good. It was positive. So some of those trades I showed you in there were from March. Like we used January because it was the month where you had 1,000 point drop and were successful. In February because it was perfect. March was a positive month. I'm gonna bring it up now. Yeah, I'll read them all. Can I put it on the screen or? Uh, so in March we did 100% premium in Walgreens. Um, we had a small loser in Mosaic, 100% premium in Altria, small loser in Oracle. Then we made money in Silver Wheaton, Potash, Verizon, Altria, Verizon, JP Morgan, Verizon, Mosaic, Abercrombie and Fitch, and then we lost in GDX1. So it was like 10 winners, three losers. Yep. I mean, listen, Todd does other things, but yeah, we're always selecting our strike price based on support. This is just one simple income strategy. I trade 3 different ways. This is my conservative income building strategy. And like, my favorite example is the Starbucks one, where you could identify a really good level of support, or even silver wheat. I'm like, well, look at that support. When I'd sell a put off that all day long. You need a big account unless you're doing, or you could do the credit spreads. Okay. As Todd just said, this is the best long-term strategy to make consistent returns year over year in any market condition. All right. Where did you sell that put on SLW 22? No, we sold it at 22 right here. And it went to 26. So we sold it above the 20 support. If you're not doing the spreads, I'd like to see a count at least above $15,000. The strategy is sell put OTM weekly and hope the stocks move up or stay sideways. Which one? Either. Either. That's my favorite thing about it. It's for either. No, for these kind of stocks, we're happy if we own it. Now, listen, 90% of the time we end up just collecting the premium. All right, guys. So once again, if you want to sign up, there are 17 of the training spots left. This is where you go. Boom. And obviously, if you join today, you'll get access to today's call. Later on, we'll send you out the copy, and you could be with us every week. Mind you, could turn them incurring large losses from deep, rapid market correction. That would be for longer term strategies because this is weekly. You have the ability to adapt and put your money into conservative positions. What we've found is the best example I could give, guys, is this. The market's been down this whole year. Across the board, the Dow and the NASDAQ, S&P 500 are all down this year, and this strategy is profitable and successful. So it's already past what I would consider to be the biggest test is, can it make money in a down market? And the answer is yes. Why do you call this long-term if you're doing it weekly? Where did I call long-term? I call it the options money machine, Richard. It's a weekly put selling strategy, and it's an income strategy. Over the long term, what he means by that, okay, what he means by long term is this. If you're doing the strategy, right, and you come on and lose one trade and stop, obviously it's not going to be successful. But if you do this consistently every week, the percentages are extremely in your favor that you're going to make money. So like I said, if someone comes on for a day and they lose money and stop, no, that won't work for anyone. But that's any kind of trading. But if you have the ability, to, okay, if you have the ability to do, If you have the ability to do these trades every week, it's going to be consistent and it's going to make you money. So long-term consistency by doing it. It's not like the $1 million strategy, it's just income every week. All right. By the way, this seems to be the more popular choice. Um, so if you guys want this one, like you can get the training from this one too, the Mesh Monthly. If you want to ease in with the monthly service, by all means. Gunther said, thank you very much, Adam. I think most of those come from FX and or futures and after first to get to know option strategy very well before doing business with them. Again, thank you very much. Thanks, Gunther. And thanks for representing the crowd. Um, you know, I appreciate that. The nice thing about the training video is it explains everything. And I've taken people that have been struggling, and I said, like, for like my dad and my sister, people that don't really trade, I'm like, just do this. Make some money every week, get paid every week, and it's what works. Okay? Yeah. JJ said because you guys, some of you were worried about the training video, um, maybe not getting it, and I guess what Gunther said is I didn't realize this was an all Forex crowd. We'll make the training video available to everyone. All right? We'll make the trading video available to everyone. All right, Richard. So good. I answered your question. Yeah, we're done a little bit early. With 10 minutes to go, I'll answer any more questions people have, but I feel like we